Join me as I dive into the world of investing to see if ITUB stock is really worth your hard-earned cash. ITUB stock, also known as Itau Unibanco, is a major player in the Brazilian banking sector, and its performance can be a significant indicator of the overall health of the country's economy. As one of the largest banks in Brazil, ITUB has a substantial presence in the market, making it a stock that many investors keep a close eye on. Its relevance in the current market landscape is undeniable, especially for those looking to diversify their portfolios with international investments. One of the main concerns investors have when considering ITUB stock is market volatility. The Brazilian market has historically been known for its ups and downs, influenced by a variety of factors including political instability and economic fluctuations. Economic factors such as inflation rates, interest rates, and GDP growth can significantly affect ITUB's performance. For instance, high inflation rates can erode the purchasing power of consumers, potentially impacting loan repayments and credit quality for the bank. Additionally, investors often worry about the impact of global economic trends on ITUB stock, given its integration into the global financial system. Another concern is the competitive landscape of the banking sector in Brazil. With several major banks competing for market share, ITUB must continually innovate and improve its services to stay ahead. Regulatory changes also pose a risk, as they can affect the operational costs and profitability of the bank. Investors are keenly aware that any significant regulatory shift could impact ITUB's bottom line. The financial health of ITUB is a critical aspect to consider. Key metrics such as return on equity, debt-to-equity ratio, and net interest margin provide valuable insights into the bank's efficiency and stability. Recent news surrounding ITUB has been mixed, with some quarters expressing optimism about its growth prospects, while others have raised concerns about potential headwinds. Expert opinions vary, with some analysts recommending ITUB as a buy due to its strong brand presence in Brazil, while others advise caution due to the aforementioned economic and market risks. When examining ITUB's financials, one thing stands out: its solid capital position. The bank has shown resilience in its capital buffers, which is a positive sign for investors looking for stability. However, the recent volatility in the Brazilian market has led to some fluctuations in its stock price, making it a more speculative investment. In my analysis, ITUB stock presents both opportunities and risks. On the one hand, its strong market position and solid financials can provide a stable foundation for long-term growth. On the other hand, the economic and market volatility in Brazil means that investors should proceed with caution. Data suggests that for those with a high risk tolerance and a long-term investment horizon, ITUB could offer attractive returns. However, it's crucial to weigh these potential rewards against the possible risks. Considering the factors discussed, my main insight is that ITUB stock does have potential as an investment, particularly for those looking to tap into the growth of the Brazilian economy. However, it's essential to conduct thorough research and consider your own risk tolerance before making any investment decisions. To summarize, ITUB stock is a significant player in the Brazilian banking sector with a strong financial position, but its performance is closely tied to the country's economic and market conditions. The potential for growth is there, but so are the risks. If you have any thoughts on ITUB stock or other investment opportunities, I'd love to hear them in the comments below. Also, if you're interested in more investment analysis, be sure to check out my other video where I dive into another stock that's making waves in the market.